I'll start.
Good morning. Welcome to the BYU Real Estate Webinar Series. My name is Barrett, Slade, Professor of Finance. Today, my co-host is Danny Wall, Associate Professor and Director of the Ivory-Boyer Real Estate Center at the University of Utah. Danny, thanks for joining me today as the co-host and for organizing this excellent panel. Before I invite you to introduce the panel, let me announce that today we're going to go the full hour and conclude at 12 noon. If you have questions for the panel, please click on the Q&A button at the bottom of your screen and type those in, and we'll get to those as time permits. Also, please note that on March 10th, I'll be hosting Nate Boyer of the Boyer Company, Danny Woodbury of the Woodbury Company, and Lance Bullen of the Comena Group. During that webinar, we'll get a contemporary view of commercial development on the Wasatch Front. So Danny, thanks for organizing this excellent panel today. Why don't you go ahead and introduce the topic and the panel members, and let's get started.
Great, thank you, Barrett. We're grateful to be included in this webinar series. As he said, my name is Danny Wall, and I run the real estate program at the University of Utah. We're thrilled to have such a qualified panel with us today. Abby Ivory is the managing director of Ivory Innovations, and there may not be anyone in the country at this time who knows more about innovations and housing affordability than Abby does. And that's our topic today is housing affordability, and specifically Utah's housing affordability crisis. Dejan Eskich is a senior fellow at the Kempsey Gardner Policy Institute and housing economist. And Dejan's going to present some data for us. Jake Wood is a partner with J. Fisher Companies, and Jake's expertise is affordable housing. So between the three, we're going to have a lot of good information and discussion today. So Dan, let's jump right in. You've prepared a set of slides for us that will give us an update, kind of set a foundation for us as we move forward in our discussion. So tell us a little bit about what's going on in Utah with housing affordability.
Yeah, thank you, Danny, and thank you to BYU for this wonderful opportunity and for giving us a chance to collaborate with the school down south. It's really a privilege. It's the topic of the last two years, basically. We've had this crazy, horrible health pandemic that's ravaged our economy, and typically anytime we see a 16% unemployment rate, your intuition and logic tells you we're going to have a correction in the housing market. We typically do when we have such disturbances, but we didn't really experience that this time around. And what we've seen, a big part of this is demand. What we saw last decade with the housing crisis, we had a lot of speculation, and the demographics weren't as strong. But what we've seen this decade is strong population and employment growth, even given the pandemic. So in Utah, we've led the nation between 2010 and 2020, the two decennial census years. So we have an accurate count. We led the nation with the fastest population growth rate. We grew our population by about 18.4%. So that, as we've seen it, a lot of people are moving here. Additionally, now if you just break down last year, for example, if we look at what happened in our market last year. So last year, between 2020 and 2021, during the pandemic, the state grew about almost 59,000 people. A third of that growth, if you look at this chart with little human figures, a third of that growth was in Utah County. So that's something spectacular in the stress that we're seeing, especially down in Utah County, all the building that's happening. So we're seeing a lot of demand. A lot of people are moving to Utah. That's really an issue of some other state. part of that was COVID induced, but we've had a decade-long trend or even 2-decade-long trend of stable population growth in our state. Now, what we track, going back to the 70s, if we look at how many households were formed, people getting together and forming a household versus how many housing units were built, every decade we've had a bit of a surplus in the units built. So there was always a little cushion where people can upgrade, people can move throughout the market, renters can become homeowners, and vice versa. So we have an overbuilding environment in the mid 2000s, and then as we get into the 2010s, our population doesn't stop growing, but our production goes way down. So what happens is we get a housing shortage. So what we're seeing with that housing shortage, and I talk about data all the time, but this picture I think is better than any data point I have. And this is downtown Salt Lake City. And as you're getting off of one of the freeway exits, what we're seeing here is.
Hey, Dan, I apologize for interrupting, but your slides aren't advancing.
Oh, I see it advancing on mine, but I'm not seeing it on that screen. So let me. Okay, you guys are seeing that?
Yep. Okay. Now you're advancing. Thanks.
Okay, interesting. Yeah, I apologize for that little glitch. So going back to this photo, let's see, are you guys seeing it? Okay. Well, as I said, this is downtown off of one of the freeway exits. And this picture really describes the problem we have with housing right now. We have a lot of construction going on. We're seeing cranes. The construction industry is really the bright spot during the pandemic. It's what kept our and the nation's economy really moving forward. So we have a lot of construction going on. We have people that aren't able to obtain housing for multiples of reasons. And right in front of them, we have this flag that says we buy houses cash. So it is such a complex problem that is everybody's problem, but it's really an income problem, and it's spread kind of all over the spectrum of what these issues are, from political issues to household issues. So when we look at, as I kind of mentioned, how the housing gap is calculated. So this is the big theme of this decade. Nationally, we're short about 4 to 5 million homes. In Utah, we're about 45,000. And how we track this is each year we track the number of dwelling units that we've permitted, and then the number of households that are formed. So anytime this red bar is above the gray bar, we increase our housing gap. So the market is imbalanced. So we keep going down into the hole. We have less housing available in comparison to the population growth. So we peak out at about 2017, where we're about 55,000. We've come a long way now. We've reversed the trend, but we still have a long way to go. So you can see there, starting in 2018, 2019, household or unit production has outpaced the dwelling unit or the households formed. So that's good, but we still have a long way to go. And we're seeing that reflected in our housing prices. So if we look at year-over-year quarterly increases in the housing price across the country, Idaho is the only state that's outpaced Utah in price growth. Every state, this is the first time in our nation's history in a really long time that we've had equal price growth, or I mean, every state has had positive price growth. And if we look at nearly 45 years of data for Utah specifically, and this kind of starts into question of are we in a housing crash situation? What's happening? There's only been really 2 periods in our state's history where we've had negative price growth, and that's throughout the 80s, where we've had big shifts in the economy structure. We've had people leaving the state, Geneva Steel issues, Kennecott was shutting down, and then we had the great financial crisis of the mid 2000s. So every other period of whatever financial and economic woes we've seen at the national scale, our housing prices have held. So now we're in an environment where we lead the nation in job growth, and the economy is recovering nationally as well. So that begs the question of what's going on with our housing prices. And I dare to say this is the worst housing environment we've ever been in, for the opposite of what we experienced last time, is because prices are so hot. And they're hot across the counties. We've never had pretty much every county experience positive price appreciation. Majority of our counties have seen double-digit increases in price growth in terms of percentages. So that translates into a lot of wealth, especially for some of our rural communities who have been in a recession for nearly a decade. So we have seen positive effects of that as well. But when we get down to the nitty-gritty of it, what does the housing shortage look like on the ground? One of the things we track, and I love this metric, is the days on market. It's almost a weekly metric we can pull from our friends at utahrealestate.com. And we have seasonality. This is going back to 2015. You know, it took 61 days in the winter of 2016 to sell your home. Okay. Fast forward to when the pandemic starts, we have no seasonality really. We get down to 5 days. You basically spend, you have to decide really quickly that you're going to buy this home. And what we saw too now is heading into the year, we expected, these days on market to bump up, but now the trend is back down again. So we're in for a rough spring home buying and selling season as well. So we're going to see a difficult home buying environment, even with the rates ticking up. The inventory solo, I just looked before we logged on. Typically this time of year, we have roughly around between 6,000 to 8,000 active listings on the MLS. Right now we have about 2,000. So the imbalance is huge. Okay, we have the lowest vacancy for apartments, and I'll let Jay talk about apartments here in a minute, but typically a healthy vacancy, this is across the 4 Wasatch Front counties, a healthy vacancy is somewhere around the 4% range. We're at 2%. So basically we're at full occupancy. There's no empty apartments for you to occupy if you're trying to make a change. If we looked at the supply of finished vacant unsold homes in the greater Salt Lake market, we're at about 2 weeks, so half a month of inventory left. So that means if there's no new homes hitting the market of new homes, everything's gone in 2 weeks. So we have a lot of stress and a lot of demand. So what has this caused us in terms of affordability in the state? If we looked at where we were pre-COVID on the median sales price versus where we were in 2021, this red line shows us the share of Utah households that are priced out of that median price home. So in pre-COVID, basically, February of 2020, roughly 40% of Utah's households were priced out. Okay. At the end of 21, we cracked the 50% mark. We're at like 53. And I haven't run the numbers yet recently, but we're just inching further and further to the right as more and more people are priced out of the median price home. If you're a home ownership, your costs are fixed, you're fine. Actually, this is good because you're creating wealth. But if you are a renter trying to get into home ownership, roughly the same logic, 65% of the Utah's renters are priced out of that median priced home. And pre-COVID, if we get now to post-COVID 2021 and so, we're inching towards that 80%. And the reason this is really important is if we look at just household wealth, generational wealth, okay, a typical homeowner in the nation, we have national numbers, their wealth is about $260,000, where a renter total net worth is about 6,000. So we're, in different galaxies of that. And that's really important as we look forward for dependency ratios, how we support retirees, and, how do we create that social income, social security, stuff like that. Those dependency ratios and the imbalances of the wealth we're not creating right now is really going to impact how we take care of not just ourselves as a younger generation, but those future generations as well. So what I want to just end on a mark here is, there's a lot of kind of uncomfortableness about our market right now, given our experience last time around. But what we have is a wave of new demand, as I like to call it. So if we look at here are 2 lines, red is Utah and the dark one is the US. And there on the x-axis is the share of population in each of these age cohorts. So we looked at from 20-year-old to 70-year-olds, what share of the population they represent. Okay, and then this gray outline here is the range that the age groups are going to hit the first-time home buyer age in the next 4 to 5 years. So in the national, we have about 32.5 million individuals that are going to hit into their early 30s, where they typically become first-time home buyers, or, you know, form their own households, move out of their parents, or in my case, in-laws' basement. And so we've never had this wave so strong. And then if we look at Utah here in red, we have an even higher rate of those first-time home buyers hitting that wave. But if we look behind it to the left of those mid to early 20s, this wave is going to hit us later in the decade. So we have a good solid decade of really strong household demand. So regardless of affordability and what's going on in our financial markets, people need shelter. So one thing I want to take away is we can't look at housing as a stock option. This is, you know, people buy homes for shelter, not necessarily as a portfolio for investment, although a lot of people do that. But in terms of just the big macroeconomic demand, it's all about shelter and your ability to cover the debt. And so this right here makes me optimistic for housing, but I'm really uncomfortable with where we are with prices, with rents, and what's happening there. We're really becoming, it's unsustainable, and I don't know where the end and how it ends, because the demographics are so strong. So I think we're in for some difficult economic household issues with housing affordability. So I'll turn it over to the rest of the panel, and thank you.
Yeah, thank you. And I know I've seen a slide on this that you've shared. So our first question is related to something that you've already touched on. Tell us what's driving Utah's population growth right now and how that's changed over the last few years.
Yeah, so over this decade, 2010 to 2020, 2/3 of the growth has been us. You know, it's been natural growth. So it's been Utahns having kids. And, you know, we're a culture of larger families for a really long time. We've led the nation in birth rate, and we still, you know, we're in the top 2 or 3 every year. So it changes a little bit, but overall, it has been natural increase. But when we look at kind of housing demand, you know, if I have kids, it's going to take a really long time for them to really become housing consumers. So we have had a lot of in-migration, and I'll share this slide real quickly, kind of on an annual basis, what our population has done in terms of net migration. So for the first 2021 was actually 2021 was the first year where we dipped below 50% on natural increase. So we looked at, the way we look at population is you have natural growth and in total migration. And so going back, you know, this chart shows 2015, you know, in 2015, net migration accounted for 40% of the total population growth. In 2021, it was 59%. So we have seen a little bit of a switch there. So that's a new environment for us that we've not seen yet. So historically, it's been us, but this last year, it's been those dang Californians coming back to Utah.
Thanks, Dan. So we've established the demand side. There's the natural population growth that Utah's always seen, and it's kind of steady Eddie type growth. We've seen a tremendous influx of people who have discovered Utah and are moving here for a variety of reasons. So demand far outpaces supply. And some people ask, well, why don't we just build more? So Jake, you're a developer who builds housing, and Abby and Dan, you both interact with home builders frequently. Jake, let's start with you. What are the main obstacles to increasing housing supply from a home builder's perspective?
Great question. Thanks, Danny. Thanks, Dayan, for all that great data. And thanks everyone for joining on this important issue. It's encouraging to see so much interest in a topic that I know all the panelists share my passion for this, and we see this as, unfortunately, a problem that's rapidly growing. So your question, Danny, is, with this much demand, why aren't the forces of the natural market taking over? Why isn't supply balancing this out? And I think everyone's intuition probably gets them to the logical answer, which is it's very hard to do. It's very hard to build housing. It takes a long time. It's very expensive. And the things that exacerbated that recently during the COVID pandemic really tipped the scale even further down. Labor became very short. materials became very scarce, supply chains were disrupted. And so over the last 18 to 24 months, that ripple has sent a shockwave through the supply side of the market. So our company does market rate apartments, we do deed restricted affordable apartments, and we do market rate single family homes. Every one of those categories has been severely burdened with the cost of materials, the time it takes to execute, and we really haven't been able to catch up. So building our way out of this particular crisis is going to be very difficult to do. I think one of the things that we're going to touch on, and I know Abby is really an expert in this, is making the distinction between affordable housing and housing affordability. And so, I hope that we really get into the meat of that conversation, but there's a million reasons why, and I know that we'll get into some of those, but for right now, our immediate crisis, it's just very hard to increase the supply quickly.
Okay, thank you, Jake. Abby, why don't you give us your thoughts on some of the obstacles that you see?
I'm happy to. We see a lot of different things coming through on this innovation side. So we're going out and looking for new things that are driving innovation within real estate, within housing, but specifically innovations that drive affordability. And so like Jake said, we're not looking at the capital A affordability all the time, which is, like 30% AMI or less, or, sub 100% AMI, but overall, how are we helping that average American get into housing, and especially like become a homeowner, because we know that's a path towards wealth creation. And when we look at this, like on the solution side, we see a lot of solutions coming through on a few different areas where we know that there are huge problems. So the problems right now that I see that we're facing are on the construction side. Absolutely. Labor is a big issue, and that's something that we've seen a lot of people try to solve for, whether it's through automation or different training programs. That's been a really big theme this year, just because the cost of automation still remains so high that a lot of times it doesn't make up, or like it doesn't overcome this barrier of like, you could still get a few guys to work on it, and it's going to cost you less to have manpower than it is to have automation. And so we're seeing trends in automation, but it's not quite there. It depends on where you're at, and we can go into some examples later. And then another big trend that I think, helps or is hurting affordability and growth and all these other things is a lot of things that happen on the, local level in terms of policy. And I really wish that we could see a little bit more transparency coming through and a little bit less pushback, transparency on like what's going on in terms of a lot of different legislation, like understanding what different things mean or are, and making sure that there's like our city council members and the people who are working at the state legislature and everything are educated on this issue. I think would be really helpful. And we've seen a lot of people do it, but I'm also seeing a lot of people try to help create more effective systems that are automated so that people are able to, break down what's actually happening in terms of policy, like zoning regulations, different types of land use, how we can best utilize land, and kind of try to put that in the policy makers' hands so that they're making informed decisions. And I think that those two things on my mind a lot lately is labor, and then like what's happening in the policy world. And I see those being big barriers to getting a lot of affordable housing or housing at all going. Yeah.
Thanks, Abby. Dayon, I'm going to be a little bit more specific. Same question, but Abby brought up policy. You interact with most of the big home builders in the state. What do they have to say about the state of public policy right now and the burden it places on them?
There's a lot of, there's disconnect between communities. What you can do in one community versus another varies a lot. And so that adds to the cost of regulation impact fees. So, one city's impact fee could be $25,000, the others is $15,000. But what I see, the biggest hurdle right now, the biggest cost is, one, land costs are through the roof. They're so expensive, but the entitlement process and going through that is becoming more and more challenging. There's a lot of misinterpretation or overinterpretation of code requirements. For example, asphalt base, they're going above and beyond what the code requires. So that costs increase substantially, and then that's passed on to either the renter or the homeowner. But we also see a lot of, public pushback and a lack of understanding and education about what are, the not in my backyard mentality, or a new one's popping up, but banana mentality, build absolutely nothing anywhere, nowhere. And so that's hurting us. We don't need to, for every, older person, look in your basement and you have a young adult living in it because they can't afford a home, right? But back to your question, a lot of it is local regulation with over-interpreting the code, and a lot of the local politics, especially this last election cycle, ran on a no growth agenda. Don't build anything. And so we have a very, the country's already polarized, but local politics are very polarized towards growth because people are just not receptive to it anymore. They're stuck in being trafficked in grocery stores and stuff like that. So really, I think a bigger piece of it too is just educating the public about our current discourse. We're not thinking long term about our, it's really about our kids. I think I'm stealing that quote for you, Danny, but you told me this. It's about our kids, and we're not being good stewards for the next generation about how they're going to experience their adulthood.
So Dan, thanks for bringing that up. I was going to reserve this question for later, but let's talk about it now. No, this is good. Let's go with the flow here. So Abby, you come from a multi-generational Utah family. A lot of people who were raised in Utah prefer to stay in Utah. And as we can see, a lot of people, like I said, have discovered Utah and are choosing to live here because of a high quality of life. It's a sticky place. People come and they generally stay. So Dan, speaking of next generation, I'm going to kind of layer two questions here. How does wage growth compare to the cost of living increase in Utah right now? And I'll just say it, where are our kids going to live?
Probably going to go move to Iowa. Okay. Or Ohio, I don't know, where you can buy a home for $80,000.
Detroit, $5,000.
Yeah. But if we look at just say between 2015 and 2020, our incomes grew at about roughly around 23%, but the price of housing increased $200,000, so about 50%. So the big discrepancy. We're not keeping up, and rents have continued to grow. So when your housing costs are fixed, I think it's okay. It's not, as long as you can cover your mortgage. But that issue, I think, becomes more, especially those that are on the lower end of the income spectrum. Those rents keep rising, and that's really where it has a ripple effect, not just through their household, but through us as a community, because now the burden starts falling on taxpayers. If they become homeless, they might require more social services. So that has a big ripple effect throughout the economy.
Thanks, Dan. Jake, let's talk a little bit about you mentioned housing affordability versus affordable housing, and your company builds both housing that is, say, naturally affordable or was at one time, and affordable housing. Speaking of where our kids are going to live and that kind of thing, tell us a little bit about the product that your company builds, the difference between market rate and affordable in terms of the physical product, and then tell us a little bit about who lives in the product that you build. Who are the people who now live in affordable housing?
Sure. Yeah. The broad answer is it's everyone. We have the demographics range from, all age groups. Incomes are really the major restriction. But if you think about the target AMIs, or area median income, that we're targeting, we really shoot for 60% and below. That's kind of our specialty as developers and owners. And in our current market, and I know I'm going to say it wrong, Dan probably knows exactly to the dollar, but it's around $92,000 a year, I think, in Salt Lake County right now. So that's a pretty good wage. But if you think about folks who are at 60% of that, depending on household size, our typical tenants here usually are in about the low 40s, $40,000 a year or so. And when you do the easy math, you think like on an hourly wage basis, that's 2,000 hours a year or $20 an hour. So when you think of it that way, that's a lot of people, right? Who makes $20 an hour? That almost everyone you encounter on a daily basis is probably making around $20 an hour. When you're out in the world, it's the people who work at Home Depot. We often refer to our first responders, our school teachers, people who really make the community go. And the ability of those people to live in the communities is very important for all kinds of reasons. We talk about these reasons a lot, but really it's community building, it's economic development, it's stability of neighborhoods, and the list goes on. And hopefully we can get into a few more of those later. But I think one of the things that people will, when Abby said capital A affordable housing, the first thing that pops into people's minds often isn't a very positive image. And so something that we've really worked on as a company and we think is part of our job is promoting education around what is this, who uses it. And so I think that's an important question, Danny, and glad you asked it and glad to elaborate more.
Yeah, let's do that. Let's elaborate a little bit more and speak and talk specifically about affordable housing. Dayan, you've done research on this where, the effect that an affordable housing project can have on home values that are proximate to it. Jake, you've done research on this. Tell us a little bit about some of the resistance that you see when you're proposing an affordable housing development. And Dayan, then you jump to you. Tell us a little bit about the findings and the research that you've done.
Yeah, Dayan threw out a couple of industry terms, the NIMBY, which is the not in my backyard, and the banana, which is basically build absolutely nothing at any time, never, anywhere. And so we know that we're going to get those sorts of pushbacks on any project that we do. We just know it's part of the game. There are people out there who will be vocal against any project. For us, a lot of times it gets multiplied because one of our goals is to just overall increase the available number of housing units at every level, all the way up and down the spectrum of affordability. So for us, that means density. We want density. We're pushing the envelope when it comes to code. We're pushing the envelope when it comes to land use. We're often pushing for rezones and upzones and things that may be politically unpopular. Even in cities who claim major needs for all types of housing, you'll still get resistance and pushback. And not to belabor the point on policy being a major driver of this, but we're working with literally doing a public-private partnership with Park City. We're doing a public-private partnership with Boise City, and Dan showed the graphic there. Boise City is the #1 most burdened city in the entire country. And we're getting pushback, even at the city level, on our proposals and our projects to bring that housing to their town. So we do fight it. And like I said before, we really push for the education, and we stand on our track record a lot. We love to tour people. We say, come by, see what this product is. What was here before, a vacant parking lot or an old abandoned building. Now it's a big, beautiful, probably the nicest thing in the neighborhood sometimes. So we really lean into that heavily, proven performance. And there's a lot of developers out there doing beautiful projects in the affordable space. I don't know if anyone on the call is local in Salt Lake City, but drive down 4th South, look at the project that was just built next to the city library that Chris Parker and his group did. I think that's the best new housing project that's been done in the city since I've lived here. And it's high levels of affordability in that project. So, I think a lot of the things that we battle against can be overcome with education, but it really is a process.
And Jake, and you and I have talked about this before, but you're effectively building the same product, right? Your market rate and your affordable the units are effectively the same, right?
They are effectively the same. And in most cases, they're at least identical. And in some cases, they're better, because when we enter into public-private partnerships with cities, a lot of times we'll get an additional subsidy that allows us to economically move things around and increase the quality of the product. And the city, when they when they partner, they really push us to do that. And so in a lot of cases, I do think that you see equal to, if not in some cases better than, on the quality.
Great, thank you, Jake. So we've talked about the supply and demand imbalance. We've talked about the challenges that we face with building our way out of this. Abby, let's jump now to the innovation space. Like I said, you are kind of at the tip of the spear on housing innovation and what's happening in that space. Can you just tell us about some of these companies or government organizations or nonprofits that are innovating, and maybe give us a couple of success stories?
Yeah, for sure. First, to hit on what Jake was saying and just thinking about affordable housing in general, I think there's like a terrible perception of who's going into these units, right? And to Danny's point and Dehan's point earlier, like it might be someone's kids, and it might be, you know, the person who's your waitress, or it might be someone like, and I think people just have this perception when they hear affordable housing that it's going to be a certain way. And so if we can like work to change that perception, I think it's really big. And so I think the first company to hit on is a group called Co-Urbanize. And they're actually a group out of Boston, Massachusetts, and they work quite a bit on the transparency and kind of working with like NIMBY groups to help educate them on what's happening with the property, what's going in, what's happening with the development, because I think a lot of times there's just pushback to change. People are so resistant to change. They want something to be the same that it's been forever, and they're resistant on, you know, new people coming in. And I've always had a lot of interesting conversations when you ask the question, well, what do we do with all of them? You know, we don't have space, where do we put them? And you know, the big NIMBYs, I've had people come back to me with like population control things and like weird stuff like that. But I mean, it's a hard topic to think about. And when you actually think about this problem, like the solutions are difficult. And so that's just my plug on that NIMBY side of things. I think there are a few different groups across the country that are working on it. There is a group in California that's like a specific YIMBY chapter, and they do a lot of stuff with legal. They push back, like if an area isn't zoned densely enough, they will like sue the city. And so then the developer isn't suing the city, but like this group in itself is suing the city, saying like, hey, we need more units here. Like we have more people. What are you thinking? What are you talking about? And it takes pressure off of the developer, which I think is an interesting model.
Abby, and sorry to interrupt. YIMBY is yes in my backyard versus not in my backyard, right?
Yes. And we do have a YIMBY chapter in Utah if people are interested in getting involved in it. Smaller, but they're trying to build it up a little bit to kind of get, you know, more pro-development people moving forward. But in terms basically with just some trends that we've seen in innovation, so we typically look in 3 different sectors. We look at public policy and regulatory reform, construction and design, and then financial innovation. And so right now, I mean, like I said, on the construction and design side, labor is a huge problem. So we've seen a lot of different things coming through with automation. And I absolutely do feel that automation is part of the solution, whether that's through some manufactured housing, if we can change the stigma that's happening or that happens around manufactured housing, which is essentially like trailer parks, but they are, we could build them differently. There's not that much saying that they have to look the way that they look, but they can be produced a lot more quickly. I think that looking at manufactured housing is a really interesting solution. I think, you know, general automation, modular construction, we've been trying to work with a few different groups that have come through our Ivory-Boyer process that, you know, are highly automated, mainly in California. So like panelized construction or strict modular. And we're trying to get some of them out to Utah. That's our big push right now. We're actually working with one group in particular. They're called Integra. They're a panelized construction group. And we are like, hey, listen, we actually have the volume you need to succeed. And we're working really hard to help bring that here. And so part of our work is we look at these solutions and then we think, how can we bring these guys to Utah? And then we've seen this year has been a wild trend in terms of 3D printing companies. They have just shot up everywhere where we've been looking. And I don't know about the 3D printing trend. That's like an automation thing for sure, but I'm not sure if I'm in on it. Icon's been kind of the leader in the 3D printing space, and they've started building homes for NASA to essentially, it's an interesting thing, but it's kind of moved away from affordability rather than towards affordability. And concrete is also questionable in terms of sustainability overall, which is another big trend we see in building. So like building large passive house buildings, especially when we're talking about affordable units, how do we drive the cost down in terms of just these monthly utility costs, I think is a really big thing to look at with those units, because that's kind of, the first thing to go. If someone's struggling financially, they're going to pay their rent before anything else, but then their utilities will kind of start to drop off and we'll see some flags there. So I think building sustainably is like, although it might not have the cost savings we want up front, they kind of come in later. And there's a few awesome groups that do that. There's actually a big architecture firm that's built the largest passive house in the US out in New York, and they're called Curtis and Ginsburg. They are a fabulous group to work with in terms of building sustainably. And then on the finance side, we see a lot of trends this last year in terms of education, especially as we try to like bridge this wealth gap and like some of these different racial issues. How do we educate people who don't understand the logistics of homeownership, like the financial side behind it? We've seen a lot of companies come in terms of like trying to educate everyone. There's a group called the Framework. They actually work with some companies here in Utah now. We've kind of helped them bring in some partnerships. They have about 1.5 million people who they serve on their platform, where they're educating renters that want to become home buyers. So how do we kind of move through this process? And in that vein, like how do we help renters come through? It's like there are a few companies focusing on credit. How do we help these renters with their credit? How do we get your rent reported and have that be part of your credit score? Because if you have a mortgage, that's part of your credit score and that rolls every single month. But if you're renting, this is your largest monthly payment that you always pay, and that doesn't usually get reported. And so finding ways that we can report that, I think, is pretty big. And we've talked about a lot of other, removal of barriers for these renters to become homeowners and save and do a lot of different things. And then in terms of, and there's a ton of stuff going on. There's like housing preservation funds on the financial side. Like I'm not even hitting the tip of it, but there's a lot of stuff people are working on. So I always preach that though this is a big issue, like there's hope and we can do things to turn this around. Like my biggest issue is policy that I always feel like is a problem. But this year we've seen a lot of different people trying to find ways to automate, like I mentioned. And so this year we've seen an uptick in automation of appraisals. And one of the reasons why is because there's a historic bias in terms of appraisals, and the average age of an appraiser is 57 in the state of Utah, I think. And so you're trying to get newer people, like younger people in this market, kind of diversify who the people are who are doing appraisals, but also automate it. So it's just standard. So like it comes in, everyone's house is appraised in the same way. And so I've seen a lot of groups looking at that. And then, we see a lot of fun things where you're trying to, like on the policy side, where they're trying to address housing for different populations that are at risk, whether it's like veterans, whether it's single mothers, which is like a big group that we're trying to house in terms of housing affordability, or like this affordable housing space. Or like right now we're looking at a lot of formerly incarcerated individuals. Like how do we house this group that's been released from prison? And we had a large number of people released from prison during COVID because of different things. And so it actually, a lot of solutions have been popping up. And one of my favorites is a group in Oakland. And they kind of do almost an Airbnb with people who are coming out of prison. And they place people in, households with someone. Typically their home share people are from faith-based organizations or have a family member that's been incarcerated, kind of understand the issue. And they really help these people bridge back into society. And they've had a 0% recidivism rate. And so currently we're working with them on a plan to scale. They're already in 4 cities, but we want to bring them to Utah. We want to help with that stuff here. So we're working and looking at a lot of these solutions and how do we bring these back home to Utah and make them, part of our solution as we move forward.
Great. Thank you, Abby. So we have time for one more question. We're going to do speed round. So Jake, Abby, Dayon, if you could solve a single housing affordability related problem by simply pulling a lever, what would it be?
Yes, and so I'll start, and it would be zoning and flexibility on zoning.
Zoning, okay.
That's number one. You can't do anything else without zoning.
Abby?
I agree with Dehan on zoning. I mean, I think that's a big lever, but I also would say another lever, if I could pull it quickly, would be education. Educating the like our general policymakers and everything. If I could do that immediately, just everyone understands every repercussion to their decision or what's going through, like that would be a big thing for me too.
All right, Jake.
Well, Dan and Abby both said zoning, and I probably would have said that too, but I'm going to say something on the complete opposite end of it. If I could just pull one lever, I would automatically increase incomes and wages proportionally to the cost of housing. That's what I would do.
That's a big lever.
I'll add another one real quick. It's increasing the barriers for city council people on their education regarding development, because I think that is a big one.
All right.
I would compare it about not having doctors in a pandemic. It's about just as bad. You know, we need proper training for these big decisions.
Okay. Yeah, and we didn't even get into the issues of elected officials and NIMBYism and the pressures that exist there, the very real pressures that exist there. So, all right, so we have some questions from the audience. There's a local developer who's wondering how he can get involved to help with affordable housing efforts. Are there local groups? Abby, you mentioned the YIMBY chapters. But are there groups that this person can join or meetings that they can attend?
Meetings on affordable housing. I mean, maybe Dehan and Jake know of a few, but there aren't a ton. The local YIMBY group is a big, like they're working towards, doing this. And then I think, a lot of other things kind of come through the government side of things that I've seen on affordable housing in terms of community groups to join. No, but we're working on it. We'll come up with something good. And Danny and I have been working on trying to get some good stuff going up at the University of Utah.
Danny, from the development side there, I'll chime in real quick. From the business side of things, I think one of the most important components of understanding how to promote housing affordability through development is how to understand capital A affordable housing and the economics around it. What are the tools that we use to be able to build this product and offer it at a discount to market? And so, I think the first place to start there is really, there's definitely conferences. There's a group called the Utah Housing Coalition that has an annual conference on housing affordability. And when I was new in the business in 2014, I started going to those conferences, meeting people, networking. I also reached out to people at Utah Housing Corporation, the same acronym UHC, one's Utah Housing Coalition, the other is Utah Housing Corporation. And they're the ones who actually issue tax credits. They oversee private activity bonds, tax exempt bonds, those sorts of things. They issue those. And those are a lot of the tools that we use when we're doing that capital A affordable housing. So I'd start there. And also I'm happy to, if my contact information is shared later on, if anyone wants to reach out directly, I could be glad to have a conversation on that.
Okay, thank you. And Dehan, real quick, you can share these slides, right?
Yeah.
And you may even have a more detailed deck that you can share, I would imagine.
I have a deck with 75 slides if anybody wants it. So.
But also to add on, go on. Sorry,
Go
I was just saying, in terms of affordable housing, like things, conferences and all that, we have big lists of those that are going on across the country if you're interested in that. And then specifically, we started one this last year that was an Innovations in Housing Affordability Summit, where we brought in a lot of national leaders in this space and different collaborators. And so that I think we'll run again this October, I want to say. We don't have the dates finalized yet, but that's another way if you're wanting to learn about it.
And I'll add real quick, sorry, Danny, but this is no longer a Wasatch Front issue. It's really a Utah issue. And so we have a legislative session that's occurring. Call your state and local reps and let them know that this is a problem, because Senator Andrzej, who is as libertarian as they come, he's leading the fight on this issue. And so it's really kind of funny to see a libertarian leading government intervention in the housing market. That's how bad this issue is.
Well, Dan, to your point, this issue, it crosses party lines pretty easily, I've observed. So, so Jake, a question specifically for you: how competitive is the construction environment right now, and how hard has it been to get contractors for your projects?
Hiring subcontractors and locking in materials pricing is our number one issue right now. We have land, we have sites, we have projects that we're working through. A real world example is, I think I briefly mentioned a project we're working on in Boise. We have an in-house general contractor. They don't self-perform any actual work. What they do is sub. So we had a good sub base. We had what we thought was a good feeling on the market. We had an overall construction budget of about $35 million just for the hard cost of construction. And when we went to sign contracts and get final bids, that number increased to $42 million. And so that's a 20% increase from the time that we did a preliminary bid to the time that we signed our contracts. And so the answer to the question is it's incredibly difficult. And we feel like we have some advantages because we have economies of scale. We have projects big enough that they'll get the attention of the subs. Smaller projects, they really, don't need to work on them. There's a lot of big institutional projects happening right now. The construction on the new airport, the construction on the new prison. I mean, these are massive projects that pull electricians and plumbers and drywallers and everyone from our jobs because they're just going to get paid more on those institutional level jobs. So the answer is it's pretty difficult. We've been able to still get it done, but I know every developer that I talk to has the exact same issue, whether or not they're a single family home builder or they're building 300-400 unit apartment projects. It is definitely one of the number one issues right now. And I think it's going to be transitory, but we're definitely feeling the pain.
So
Jake,
Jake,
I recently spoke with one of the larger developers in the state who mentioned that a longtime construction partner recently told them that they didn't have time on to do one of their projects, which is surprising.
Shocking.
Barrett, I think I interrupted you. I'm sorry.
Oh, I'm curious, Jake. There's been a lot of discussion regarding labor and materials. Speak to land prices. We know that once land prices go up, they tend to be kind of sticky downward. Tell us a little bit about your thoughts about land acquisition costs.
We have a saying around our office, when we look at a piece of land, if it's already been publicly listed by a broker, then it's too late. We can no longer afford it. The competition from out of state developers who are used to higher land basis, they just get bid up. And now that used to be a problem, what we call inside the Beltway, Salt Lake City, east of I-15 and north of I-80. We knew we were going to have competition on those sites. That was kind of the sweet spot. Well, now it's expanded. And to Dayon's earlier point, it's not even just up and down the Wasatch Front. It's not just Utah County, Salt Lake County. It's Davis County now. It's Clearfield, Layton, Ogden, and everywhere in between. It's over the back. It's in Summit County. Land is becoming increasingly scarce. We have finite geographic and geological boundaries that we have to work with. And as we all know, they're not making any more of it. So yeah, land prices has been and continues to be a challenge. We've looked at public-private partnerships as a temporary solution to that. The state has a massive surplus of land. Local counties and cities usually have lots of surpluses of land. The University of Utah, we've done partnerships with Intermountain Healthcare on surplus land that they've had. We've really tried to get creative in the types of partnerships that we put together in order to kind of strategically work around that land cost issue. But it is troubling. And to your point, it's pretty sticky. And that's another one. Maybe that one's transitory, maybe it's not, but they're really not coming down.
Yeah, what is happening with tear downs as land prices go up so high and we have a lot of older dilapidated properties? There are lots of things going on with tear down and reconstruction.
We see that a lot, in Salt Lake specifically. I think you're starting to see more of that on the west side of town. The North Temple corridor, if you pay attention to that between downtown and the airport, has seen, I can think off the top of my head of 10 infill projects where they're tearing down. Most of those are reuse, so they're doing they're changing the use of the property from a commercial to a residential. But there also are single family homes that are coming down there. I think maybe that's good news or not. in the sense that it usually increases the density by orders of magnitude. So I know of a project where they're tearing down 4 single family homes and they're putting in 30 townhomes. So it's a net positive increase. And, we hope that that trend continues, in that when housing is taken away, it's replaced by orders of magnitude more housing. But again, tear down houses, $400,000 or $500,000 that the developers are willing to pay. So then now they're naturally competing with a single family home buyer who might think that that's a perfectly great house, but now they've been priced out because the developer values the land under it more than the house itself. So two-edged sword.
So
Thank you.
there's an interesting, I think we're running a little short on time. There's an interesting question in the chat that I'd like to just get to quickly. Abby, you have experience in this, but the question is what tips you would give developers for who want to build affordable housing projects, but they're bound by investors' high cost of capital. And Abby, I'm going to lead you a little bit on this, but there are investors out there who have different cost of capital expectations, right? So
yeah, my history and background is in impact investing. And so I think if you can find people who are looking to invest in housing, and especially like there are a lot of people who are willing to kind of lose a little return for some positive gain on some of this stuff. And so I think, finding the right investor to work with on something is really big. And we've seen a lot of interesting different groups be able to pull in great levels of investment working with banks, using CRA money, depending on what you're doing specifically, is another really good option. There's a group out in Detroit actually that's pulled in a lot of CRA money and impact investment to actually rehab almost like an entire community. And when land costs go up, I think, and there's some of these other issues, how do we also reuse this existing space? What's like rehabilitation becomes much more attractive, I think, at that point too. And I think some people may be interested in funding those specific projects as well, like preserving. People have been using historic tax credits to preserve existing buildings, which is a really interesting thing. But the tax credits allow them to build and rehab differently, and it provides like another layer of the capital stack, like Jake's saying, like understanding how these capital stacks work on affordable housing. There's a lot of ways you can pull in tax credits that may be unique to a specific industry or area or something like that. So I think looking at tax credits is also another really interesting side of it.
So it's just, it really comes down to the investor and their values and their return expectations. But that impact side is growing. ESG is growing among institutions and corporations. So, keep an eye on that. Barrett, this has been fantastic. We want to thank you for including us. I'm going to pass it back to you.
Okay, thank you. And just thank each one of you. What an excellent discussion we've had, and your qualifications you bring to the table. We have students on the call as well, and we usually just take a minute here at the end to share some thoughts about career opportunities. And would each of you just take just a minute and share in your sector what maybe opportunities exist and any advice you could give? Abby, let's start with you.
For sure. We run a big internship program here at the University of Utah. So it's not a full-time opportunity, but we like to bring students in, and essentially we have students run fall, spring. They intern with us and they interact with a lot of these different companies or policy makers or nonprofits. And then we actually place them with these companies for the summer and run a summer internship. So we kind of span the gap. We really hit a lot of different sectors and let students pursue the areas they're most interested in, as long as it kind of aligns with affordability and innovation. And then we'll pay for them to run the summer internship. And then a lot of those summer internships end up converting into full-time jobs. So that's kind of how we push this internship opportunity. We are also looking for a director of communications here. So if you have any students that are graduating soon, send them our way that are interested in that side.
And Abby, you've had non-University of Utah students in the internship program,
yeah,
including students from BYU. So
yes, we'll bring in BYU students and also students from Utah State and Westminster will run through this program. So if they're interested, we'd love to have them.
Super, thank you. Jake, let's go with you.
Yeah, to me, the opportunities in affordable housing within development are some of the most exciting if you love getting way into the weeds and love the details of the work. You can be very successful. We call it doing well by doing good. So you can certainly make a great career out of it. To echo Abby's point, we definitely offer internships. We've had several interns come through the MRED program at the U. We've hired former students from BYU as well. So I would be glad to make a connection after the call and put the right people in touch if students are interested in being notified when those opportunities come available, specifically at our company. But anyone who has a general interest in real estate development, but also coming at it from a little bit of a social impact side, I think can find a very fulfilling career in this type of development.
Great, thank you. Real quick, Dayon?
Yeah, my sort of world is a little bit different from Jake and Abby's in that it's a little bit more analytical and data oriented on a day-to-day. And I think what they do is way more fun. So now I need to rethink kind of my day-to-day. But at the Gardner Policy Institute, we always have internship opportunities throughout the summer and each of the semesters. But kind of on a bit bigger picture, I think our industry, the real estate industry, doesn't utilize data as well as some of the other industries, like the finance world and those industries. So there is so much data out there that we don't know what to do with it. In a way, we still don't know what we don't know. So I'm making the pitch here to be as good at data analytics as you are at using Microsoft Word.
Great, thank you, each and every one. And Danny, you've put together a wonderful webinar again. We thank you. And for everyone on the call, we hope that you have a wonderful afternoon. We invite you to join us on March 10th, where we'll learn about commercial development along the Wasatch Front. Have a wonderful afternoon.